Most traders overcomplicate their strategy. Today, I'm giving you the easiest 75% win rate strategy that I have used personally myself and currently do use to generate consistent profitability in the markets. Not only that, this is the strategy that got me profitable, and it is the one that I use to trade live in front of an audience for over 2 years, showing my entry exits to show this strategy in action. I'm going to break down 2 of the simplest entries to help you trade a multitude of market conditions and make sure you're able to know how to enter, when, and what to look for in order to achieve consistency. This strategy is so simple to understand that any beginner will be able to understand it, and then your job is just to become a master at it. So if that sounds interesting, definitely stick towards the end of this video where I'm going to show you how the strategy works and show you live examples. So that being said, let's get straight into it. Alright, so today's video's goal of the video is going to be to learn this strategy all throughout. So a few rules before we get started. Only enter when the market has a strong bias, which we will discuss during this video. Focus on your key support and resistances, very important. And only trade during high volume times, meaning trading during London, New York session. Don't trade random times at night, first thing in the morning. Trade during volume time so you can get to TP. And it works every day. And you want to build a repeatable method, which is what this is. So first thing we're going to start with is support and resistance, because we need to put a little bit of a map on the charts here. What are we looking for? Where can we take trades, etc., right? Because these are acting as walls. Think about them as walls. We don't want to trade at walls. We want to trade between the walls because that's where it's going to be clean. So a resistance is when a candle closes bullish and then the next candle closes bearish. That creates a resistance. Now, purposely, I've drawn it wrong like this, because most people draw it on the wicks. This is wrong. You want to draw it exactly on the bodies. Very, very important. It's a common beginner mistake. So that is a support and that is a resistance. Support is just the opposite of a resistance. I prefer there to be 2 or more candles. 1 candle does count. And when you come to a chart that looks something like this, it looks naked, nothing really. You don't know where you can trade, where you cannot trade. When you mark your support and resistance, boom, you start to mark the areas and it starts to become clear. But these are just some points. I want to show you how to do a proper markup. So we actually start all the way from the weekly. Weekly has nothing. This is gold right now. Gold is at all-time highs. We are free flowing. So you don't have to mark anything. You always look left for the most recent support and resistance. The next time frame you go down to is the daily. So the daily has 1 support, which we're sitting at right now, which is this bearish candle followed by a bullish candle closure is the support. Okay. So we mark this. I like to label this as daily support, DS, so I know what the hell I'm looking at. Okay. Once we do that, we go down to the 4-hour time frame. We can see the 4 hours a little bit lower. I'm going to fly through this, and then we're going to talk about the entries, because I'm going to show you 2 entry models that are going to be all together in this video that makes sense. So those who watch my channel often will see this concept again and again about marking support and resistance, but it's the fundamentals of my strategy. So for new viewers, they need to learn it. Otherwise, they're not going to be able to make money like this. So 4-hour support here, boom. We mark that as 4-hour support. Next time frame we go to is the 1-hour time frame. We mark our support and resistance. So we have 1 here, but since I'm not going to be trading from here to here, I'm just going to leave it out. Our next resistance, if this in 6 minutes closes bearish, this will be our next resistance, because it only counts when the candle's closed. If this was not closed, our next resistance is actually here. Even though this crossed through it once, it still counts because support can flip resistance. Only if it's crossed through it once, we can mark it. And we just keep going down. 30-minute time frame. Where's our resistance? I'm going to give you 5 seconds. Nope, not here, here. Right? So if you said here, you're wrong. It's actually here. Okay, very important. That is your 30-minute resistance. And you're going to do that all the way until you get to the 15-minute. Once you do that, you're going to have your marks, right? That's your markup, right? And that's super important. The next thing we need to check is, okay, I have my markup. I know where I cannot trade. Those lines show you where you cannot trade. If you're trading at a line, you're done. You need to be trading above or below a line. But how do we know if we look for buys, or how do we know we look for sells? Welcome to something called bias. So bias is, we're going to utilize the previous daily candle close and the previous 4-hour candle close in order to find bias. So if the previous daily, like we can see here, has closed bullish and the previous 4-hour has closed bullish, closed, I'm only looking for buys, right? Very simple metric there for you. Very clear, very simple to see. Now, if we see previous daily close bearish and the previous 4-hour close bearish, I'm looking for sells only. I can only take sells on that day. So I'm not looking for any buy setups. I'm only looking for sell setups. Now, what if they close opposite? This is what we call a mixed bias. And a mixed bias means essentially you can look for both, to keep it simple. I prefer you guys to trade only when it's bullish or a bearish bias. Mixed bias will happen quite a lot, but start with bullish and bearish bias so you get confident with that. It's easier than a mixed bias, okay? So now what about the entry? So we understand about bias, how bias works. We understand that this is how we look for buys, this is how we look for sells. But where we're going to look for the buy or sell, this is the number one rule. We need to have something called clean candles. If we look to the left where we're looking to trade, so say today we're only looking for buys and I'm looking here to the left and I have all support and resistance. Remember the markup we just did in the beginning of the video? If you have loads of lines, you don't have space to trade. You need to be able to have enough space to at least make a 1-to-1. Or you need to have enough space to get the position in profit and see if price can push through that resistance. Because just because there's a resistance here, which this is what people don't teach online, they say don't take the trade, not enough risk to reward. No problem. If I get a trade here and I'm entering right here, that's my entry. But here's not a 1-to-1 with my stop loss, let's say here. I can see if there's volume to push through, and if it doesn't push through, I get out at my entry, I lose nothing. I gave it the shot because bias is bullish today. We should expect price to continue up. Okay, so we always need to look for clean candle zones to trade. So let's go see our markup today and let's go see areas we can trade in today's scenario. So let's look at today. Today, where can I trade? That's a nice area, no support and resistance, but we have a line here. That's why we do it. It's a 30-minute. So we can trade from here to here if setup performs, right? That's allowed. Can I trade from here to here? Nah, it's too close. Not worth it. How about from here to here? It's a little bit better, but not the best zone, right? Still a little bit close. Let's go investigate some zones. What about sells? How much room do I have here? This is my next support down here. I have this room here. That's how much I can trade. Let's see how much that's worth. That's worth 27 pips. Not bad, 27 pips. I can probably trade that as well. So this is how you identify your zones. You're just looking for clean candles. And these lines become what? Targets. Now they're becoming targets because that's where we're going to look to take profit. We're going to be looking to take profit at our next zone. And we trade from zone to zone. So instead of thinking of market of some complex tool of support, resistance, structure, break of structure, change of structure, this, that, liquidity, we think of markets as trading from range to range. If we can break this range, we can move to the next range. And you think about it like boxes, right? Like this is one box here. So look at this morning. This morning, right, filled this box. Then we filled it back up again. We retested this resistance. We filled the box back down. Where? To this support. All we did is go from support to resistance, resistance to support. We're filming boxes. This now can just start ranging and then eventually fill up here or respect down here. So we think about market in ranges. Okay. So what about the actual entries here? There's going to be two type of entry types we're going to talk about here. And that's going to be called setup 1 and 2, right? So setup 1 is going to be when we have a candle closing above a resistance to take a buy. And setup 2 is when we're going to be having a pullback to continue the trade. The reason I'm showing you these two scenarios is because we can be involved in the market in two scenarios. You can come to your session and during that session, the market has already pushed. If the market's already pushed, you need to be looking for setup 2, which is a pullback trade. Okay? If the market is in a range and you have a resistance or a support, right? Remember based on bias. So if bias is buys today, we're only looking for buys above that next resistance. If bias is sells today, then we're only looking for sells below the support. If bias is bullish here, meaning we're only looking for buys, I'm waiting and price has just been pushing. I'm waiting for the pullback. I'm going to wait for my confirmation and take the trade. So let's go talk about the confirmation. So setup number 1, okay? Setup number 1 is we need to have bias first. So let's say today is bullish bias in this scenario. We need to have a resistance and a support formed. They have to be formed. And what we're looking for is preferably 2 touches towards that resistance, okay? Again, I've just drawn these lines as demonstration, but we want the lines accurate, okay? So we want 1 test and preferably 2 tests. 1 test is enough. But if we can reject that resistance twice, it's way better. Then we're going to scale down, okay? And this is all on 15-minute time frame. I'm talking about 15-minute time frame here. We're going to, and this works on 30-minute time frame, whatever you want to trade on. 30-minute, 1 hour, you just have to wait longer. 15-minute, I enjoy it. You get more opportunities. All you have to do is wait for a candle closing above that zone. The minute the candle closes above that zone, you're going to take an entry, breaking the high, and targeting what? Whatever the next level is, right? That's going to be your TP or a 1-to-1. 1-to-1 is always a great spot to secure. Oh, 1-to-1s are not profitable. So you're telling me that 3 years worth of live data and 75% win rate is not profitable? No, it is. But if you have a low win rate, yeah, it's not going to help you. Okay. So if we were to look at an example on today's chart, for example, where can we look for setup 1? We can't today. Setup 1 is a little bit tough. What do we see playing out now? Actually a setup 2, because we have no range to break above. This would have been a nice setup 1, but what's the problem here? This breakout has a resistance here. So if this was clean candles, this would have been a valid trade today. You're starting to see that, guys? So this would be it. If this was all clean like this, now I can take a buy here, breaking the high as we close above the resistance. Where's my stop loss going to go? Stop loss is going to go where? Below the candle that closed above. Very simple. 15-minute stop loss below the candle that closed above. And you're going to target the next resistance. In this case, it's only a 0.5 risk to reward. But what can I do there? If price doesn't push through, I can go break even. And my next target is going to be the next resistance, which is my basically 1-to-1 right there. And that's it. But today we couldn't take that. Why? We couldn't take it because we have this resistance right here. So what's happening instead right now as we speak? A setup number 2. Okay, so as we speak right now, there's a setup number 2 playing out. Okay, so let's discuss the setup 2 and build on that. I will give a live example of setup number 1 towards the end of the video. I'll replay you a trade. I'll also replay setup 2, so definitely stick with me. Now, there are more than these setups because there's different scenarios. But in this video today, I only want to show you 2 setups. If you're interested in learning more about my strategy and trading with me live on a daily basis, speaking to me directly, gaining feedback, and you want to take it past YouTube, you can join the exclusive group. Very affordable and something that can massively help and be part of a team, right? A team is different. To focus on the goals, speak with me directly and join a team, okay? But for now, we're only sticking to 2 setups. So don't confuse yourselves. Do realize that there's more towards the strategy. It's not only 2 setups, and that's why I want to be clear about that. I do talk about some of the other setups on my channel as well. So just be a subscriber, leave a like if you're enjoying the video so far, so we can actually learn this stuff. I have so many videos, guys. You will find so much value on the channel. So setup number 2 is exactly what I said. You can't buy here because there's no resistance to close above. We've just been pushing straight. So we wait for candles to close bearish. This candle's closing bearish has done what, guys? This has created our clean candle zone, right? These are all clean candles. We wait for a candle to close bullish. Once the candle closes bullish, we look for what? We look for the next candle to break the high, stop loss below the candle low, and we target the next resistance. I did take this trade live on live stream. I live stream Monday to Friday, every single day London session, and I took a similar trade. So this is the trade I took. Same idea, right? Pull back, right? I'm on lower time frame here. This is the trade I took. So there we go. Candle pushed up. I couldn't take an entry. Too much resistance. I wait for the pullback. Once the pullback comes, I take an entry, what? Breaking the high here. So we can see that happen live. I took it, boom, got entered there, pushed quite nicely, as we can see. And you can see it's exactly the same move I'm showing you now. We had this 1 hour resistance here. So watch what I do when it hits the 1 hour resistance, okay? So when it hits the 1 hour resistance, I will actually move my stop loss to break even, meaning I move it to entry because it could reject from there. And that could end up giving me issues. All right, so we see it come up here. I'm going to just skip a little bit more to show you. So boom, comes to that zone, move stop loss to break even, and then eventually, boom, smash TP, everyone W in chat. So that's a beautiful trade. This is how the strategy works. I want to show you an example of setup number 1. I'm going to utilize Pip Labs, our backtesting software simulator. It's a great way to practice to show you this example. And then I'm going to give you a very important tip here at the end of the video. This is a trade that I took. You can see here, entered break of high, closed here at a 1-to-1. The trade looks like this. That's where my stop loss was. I would like to replay this trade. This would be your typical open range right here, but we don't really want to buy here, even though today it sort of played out and you did get a push. We don't want to buy there because there's all this resistance here. Remember, I want to buy above clean zone here. So I'm going to replay this so we can watch it play out tick by tick. So we're going to skip candle here. This was my entry candle. You can see how it created perfect support above here. We have that one bearish candle, and simply all I did is I'm like, okay, place an order here, and we're gonna do a buy stop. It was break of high. Now I put stop loss back in the range. Typically you want to put it below the candle that closed above, but I chose to go just back in the range to basically more advanced stuff, understanding that this is a structural point, so it is fine to do that. And then let's go see how this trade ended up playing out. Slow it down a bit, and let's place the trade would help. Let's put it at like, you know, 2, buy stop, and that's how it was. TP was 1-to-1, and then let's play the trade here. So it opened beautifully here, no top wick. We always want to enter break of high because it could probably just reverse here sometimes. And then this is exactly how the trade was live, so you're watching it in replay. I'm using a simulator called Pip Labs. It's a web-based simulator that allows you to view the trade. So see, if I didn't wait for break of high, you could have been stopped out, right? Otherwise, this is just giving me more confirmation. So essentially, boom, broke the high, got into profit straight away. I always recommend back testing what you learn. So go in a simulator and simulate. Don't go live market and lose money on things you don't know. Prepare for it by actually simulating. That's what simulators are built for. And prove to yourself that this works. I know what I'm doing, and I have a strategy with data. So had some drawdown. That's part of the game. And, you know, then it ended up being smooth. Nice volume came, and then boom. Didn't hit TP there because of spreads. On our simulator here, we actually have spreads. The version you're looking at here is version 5. We're releasing this next month. If you go on our website, in the description, you'll see version 4 is a little bit less sophisticated than this, but you will be upgraded to version 5 when we release. So I would just wanted to use it for this example. I really like to explain while you see. So that was setup 1 utilized on our Pip Labs tool there, which you can also find in the description. And like I said, if you want more value and want to take it past YouTube and actually be part of a trading team, join our New York trading floor, where we trade New York session on a trading floor, London session, have an open office workroom environment. You're more than welcome to. Just, you have to join the waitlist, write a short description of why you want to join, and then if you're accepted, you're in, and that's it. So I do hope you found this a valuable strategy. Please do let me know. Even if you apply this strategy, watch my videos on YouTube, and then after a couple of weeks, come back on this video and comment, because I read the comments. Leave a comment. I'd love to see, hey man, it's been working well for me. What do you struggle with? So I can maybe make more videos on what you struggle with. That really helps me for the channel. I love to put out value. Hopefully you're finding it useful. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.